Let's start off with the comments from Fed Chairman Ben Bernanke talking about the dollar and reiterating the strong dollar policy. And he usually leaves that up to Treasury Secretary Timothy Geithner to talk about the dollar. He also said that interest rates will remain at 0% for some time to come. On the other end, Barack Obama talking about a strengthening yuan. Looking at all the currency play that's going on, what do you think is going to happen going forward from here? Is the dollar going to weaken from these levels?
Well, there's still a risk that the dollar does weaken indeed, yes. I mean, of course, you may have US authorities occasionally paying lip service to the idea of a stronger dollar, maybe to reassure a little bit some of their partners. You know, for instance, China was saying yesterday that they don't see why they should be the only one letting their currency appreciate. The US is wary of getting other nations to perceive that they are on a trade war. They are trying to gain competitiveness by devaluing the dollar. But the fact remains that the US has a structural current account deficit, which has been financed by issuance of US Treasury debt in large part. And when the dollar depreciates, you know, it's especially as in the case of the US, you don't get an inflationary effect. It reduces the cost of your debt and the value of your debt over time, in at least in foreign currency terms. So it's been a convenient way of basically getting away with these structural imbalances for a long time. And that has led international investors, both public investors, the central banks, the asset managers, and private fund managers, to relocate some funds away from the dollar, which have led to a sort of secular dollar decline.
Exactly. Well, they're going and buying gold at this stage. We saw central banks of India and, of course, China really diversifying their forex and buying gold at this stage, which is translated into gold prices reaching about $1,140 an ounce. Jean Francois, one of the things that I've picked up is that central banks globally and historically always buy at the top, usually, of the gold cycle and sell at the bottom. Why is it so?
Well, you know, a central bank is not just driven purely by profit-making goals like a private fund manager or a hedge fund. You know, they also have a public interest mission, which means that sometimes they have to lean against one particular currency move. And that means that they're not getting the optimal returns on their assets. The problem of gold is that a lot of people thought that gold has had its days, you know, in the 1990s, and when central bank was selling at that time, a lot of people thought it was going so even lower. I know where it was the barbarous relic Keynes has spoken about. You know, gold was no longer used as a store of value. It was just another commodity, and demand for all commodities were weak in that period. Of course, the last 10 years have shown that things can differ a lot, and now we have that unusual situation where gold is extremely high, even though inflation, against which gold is usually a hedge, is not that high. So it's really a mistrust about paper money, mistrust about the dollar, which is driving in part that craze for gold.
Well, obviously there isn't a lot of trust going around, especially about the dollar. And as you alluded to earlier, all the strong dollar policy talk that we've been hearing, probably lip service, because at the end of the day, the dollar should be weakened, especially if the US wants to pay off less debt going forward from here. So if we do see gold prices rallying from these levels, at what level would you suspect the dollar should go at? To what extent should it weaken?
Well, I mean, at Citi we do forecast that versus the euro in particular, the dollar can move to about around 160. Actually, that wouldn't shock us. It probably is not sustainable for a long period at that level, because yes, the dollar maybe has a potential to depreciate over time because of the structural imbalances of the US economy. But against which currencies? You know, you can argue that yes, it has to depreciate against the currencies of Asia, where most countries have strong growth and current account surpluses. But should it particularly depreciate versus the euro, where the economy is quite sluggish, and the zone altogether doesn't really have a structural current account surplus? Well, my feeling is no. If the euro stays around 160, you're going to have to see very sluggish growth in the eurozone and very low interest rates in the euro area, and eventually you do get some rebalancing.
The first MPC decision for Jill Marcus, of course, today. And it's quite interesting what we saw happening over the weekend. A lot of talk about the Reserve Bank's mandates going to be broadened just further than inflation targeting and price stabilization. Jean-Francois, do you think we'll hear any news on it today?
I don't think so. I mean, basically, I'm pretty sure the Reserve Bank is going to say, right now we have a mandate, which is to maintain price stability, and we have an inflation target which is 3 to 6%. Until we are given anything different, or told anything different, we are going to conduct policy in view of that mandate and not start speculating about whether the mandate might be or might not be changed, because it hasn't been a decision to change the mandate. It has been a decision to set up a task group about discussing, and that can mean a lot of time can elapse, you know. My feeling is that the message that the SAR will want to send is that there is maybe a change at the top, but there is policy continuity. There's a team that has been focused on doing one thing right, and they're going to continue trying to do that thing right. So I would say steady as she goes. No change.
Would you say that we're going to see a 50 basis point cut? A lot of people are calling for another cut, either at this meeting or the December meeting. A lot of speculation over whether we are going to have another December meeting, and also just keeping in mind inflation pressures looking forward into 2010 do not look that good.
You could get another cut, although that's not my baseline scenario. I wouldn't put a probability of more than 30% at present. The economic data start to fit bit by bit into the puzzle of a gradual recovery, so that reduces the pressure for an additional rate cut. But we've had good inflation data over the past month. If in the next 2 or 3 months you get again positive surprise on the inflation front, you could have another rate cut, but I wouldn't expect it today.
Retail sales contracting by 7%, and that's the previous reading. We're going to be getting a retail sales number out later on this week. Obviously quite important. It'll give us some clues as to where the consumer is headed as we head towards the Christmas period. Jean Francois, are you feeling optimistic that we'll be spending this Christmas?
I don't think we will be spending much, but we've cut spending so much that we're probably starting to level off. You know, we're not going to cut it much further from current levels, and I would suspect that will eventually translate into retail sales figures which are less negative. And already for the month of September, I would expect a less negative reading, somewhere around -4.2, -4.3. Just like we've had a bit of a choppy pattern with the manufacturing data. You know, a good July, poor August, bit of recovery in September. So it's typical of a bottom of a cycle, this bouncing around the bottom. And I think that's what we're going to see with sales.